The Hedgeless Horseman here again. It's December the 22nd, 2022. And in this video, I'll briefly discuss one of the HODL portfolios, which I think is probably the most helpful one to other people, especially for people who are not that good at, let's say, value shuffling, etc., and have, let's say, strong convictions. I mean, it is really hard, but the point of the HODL portfolio is to show that you can have good returns without doing much. I mean, really good returns without doing much. And why I think that everybody who's always talking about timing and trading and this and that, yada yada. I mean, I think they're typically they're not good at what they do anyway, because trading and timing is so extremely hard. And like I said before, I think it's almost impossible to beat the market short term. Meaning that you're correctly positioned for every movement, every up move, every down move. You're not in at any down move. I think it's a siren song to be a market timer, and I've discussed the reasons for that. I mean, first of all, I've shown you the Bear Creek Mining proxy chart a couple of times. I mean, the big edge, or the only edge in that one, is to have a 2-year time frame, pretty much. That chart is absolutely worthless on a day-to-day basis, or even a week-to-week basis. Again, this says nothing about the short term. Absolutely nothing about the short term. It says a lot when we are at extreme or near extreme valuations. Oh, Jesus. Both up or down. When it's close to this black rail here, for example, upper black rail, one should assume that if you just hold the sector for 2 years, you're gonna be down a lot, even though it, starts by going up, even to, what's this, 2006? Actually, this was like 2 years of actually going up and staying neutral, but then it collapsed. And here it had a brief spike of whatever, and then basically the worst bear market ever. And the opposite happens here. Sooner or later, I mean, these are all cheap levels. Again, you didn't know at this point that it wouldn't go down here. You didn't know at this point it wouldn't go down here. Important thing is to simply, okay, if it's cheap, let's say below, or very cheap below this line, obviously if you just bought, every time it dipped and just kept on buying, you would have made money, good money. Regardless if this was the bottom of the bottom would have been here. Nobody can predict that, in my opinion, but just buying cheap all over again, all over again, all over again, averaging down, and like I harped on for months while we were in this downtrend. The only thing we know is that one extra day of down action takes us 1 day closer to the inevitable bottom and the inevitable up day, and all of a sudden, boom, 200% up. That's all that, I mean, doesn't get much simpler than that, literally. I mean, not catching falling knives or whatever, I think that's from people who don't make any money, pretty much. I mean, company specific, you shouldn't buy just any company that's going down, obviously, but it's like for this sector overall, and you shouldn't just, trade Bear Creek Mining. But obviously, it's like for decades, this has proven to be the case. When this sector is dirt cheap, nobody knows when the actual bottom is in, but as long as you just buy all the way down, regardless of when it actually bottoms, you're gonna end up making money within 2 years. And like I showed in the last video about, you can have don't judge yourself if you have, poor returns first year, whatever. This chart kind of suggests, I mean, if you started your investing career here in the mining space, the odds of you not being down right now are incredibly low. So you shouldn't take that personal. Almost every stock is down. Has nothing to do if you're a good investor or a bad investor. Yes, it wasn't the best timing, but that's another story. So it's like in a cyclical sector like this, I think you need at least 4 years to really appreciate if you have on average made better decisions than bad. Because on a month to month or even year to year basis, it's almost impossible. If you bought in cheap, yes, that's good and all, and you'll be rewarded for it. If you bought in only expensive, you'll get punished for it. But still, I mean, unless your investing career is over here and you run for the hills and get out of the entire sector, then you'll still be along for the eventual downtrend, etc. And our goal is obviously to have, let's say, solid returns forever until the day we stop investing. But that means, I mean, you should only compare if you start investing here and have less money now, you probably need to fix some stuff. If you start investing here and are down now, completely understandable, totally natural. If you invested here and are down when we are up here, you made some serious mistakes. But point is that it's like I really think you should need, I mean, give it 4 years. If you can't beat this market over 4 years, and especially if you can't beat this market from here over 4 years, we'll have big problems. But point is that yes, we'll have these big flushes. Yes, almost regardless of what junior you're into, unless you're like in 1 or 2 juniors that actually are the top percent of performance, etc. You'll be down a lot, and that's completely fine. Like I said before, this is the 4th time going into here that my average junior is at least down 50% from the recent top. I mean, like I showed last video, I started buying here, went down 50%. I mean, this is a 50% retracement, basically, down to this low. Still, gave it enough time, worked out well, bought this low as well, buying all the time, just more when it goes low. And what happens is that typically, yes, my average stock goes down 50% or more from a recent high going into this, but then the bounces get exaggerated because, like I showed with volatility, you can slush around a lot. And if you're down 50% now, I mean, there's no shortage of juniors out there that have an expected return of more than 100% over the next 2 years. So 50% down in this sector is like, if you're down 50% in a not so volatile market, broader stock market, you probably have made some major errors. Being down 50% in this sector, I don't think that's a problem at all. Again, this was a 200% rise. Sure, I mean, if you're down 80% only having bought Bear Creek here, you'll have still ways to go. But as long as you average down, let's say you start buying here and you buy all the way down, and maybe you get your average down to here, then you'd actually already be up, even though this was like a, 70% down move. But as long as you average down, buy cheaper, do some value shuffling. Right now you can buy some of the best companies around. Like here, just a preliminary list of some juniors with votes of confidence from much smarter people and bigger companies than ourselves. Like Brixton got BHP saying, hey, we like what you have, and that again doesn't mean a guarantee, but you can just compare the market cap of Brixton Metals to whatever size BHP would need to see, maybe at least $2 billion. So they're saying, hey, we think you got a shot at something that's might be end up being worth $2 billion. Obviously, there's upside potential from $100 million market cap to what BHP would want. Hannon Metals got Tech, Montage Gold got Barrick, Endeavour, Perseus, Lundin. You can read the list here. I mean, if you're investing alongside these companies here, does that guarantee that you'll have a multi-bagger? No, but it's probably guarantees that if you buy around the same time and valuation that these guys have at this point in time in the sector, or even here, odds are it's almost impossible you'll be making a mistake. But not all companies work out. But I would bet that if you just, for example, this list here, if you just bought these companies, made a portfolio out of these companies, if you're down on this portfolio without trading a single share in 2 years, I would be incredibly surprised. Incredibly surprised. Because who knows? I mean, let's say Brixton works out really well. Maybe that's a 10 bagger, 20 bagger, who knows? If you have equally weighted positions, any one of these could pay for almost the other ones going to zero. So if, let's say, 3 work and you hold them for 2-3 years, let's say, I think they could pay for all the other ones. That's just, again, risk reward. You're spread betting. Not that every company will succeed, but the ones will do. If you hold them long enough, they'll do well. But you can't, none of these will pay for the others if you hold these for a month or 3 months. Brixton is not going to prove up a BHP-sized deposit in the next 3 months. So you have to let them blossom as well. It's like somebody said, 10 baggers are not created, they are held. Because a 10 bagger is made up of, let's say, 50% moves every 6 months or whatever for X amount of years. So if you just threw away the password to your portfolio and you held like these, for example, in 2 years, if you did nothing, the ones that worked out really well, you let them run. The ones that failed, you didn't add. At the end of the day, I think you will have made good amount of money. And again, it's almost impossible that you're doing a mistake if these companies here say that you're not doing a mistake. And again, a mistake, people think that if you're down on a stock or a stock doesn't work out, you made a mistake buying it. That is completely false. That is 100% hindsight investing. Nobody can guarantee anything. I made money on high risk, high reward stories. It just turned out well. There was no guarantees that it would turn out well. I've made money on bad stocks. I've lost bad cases. I think I've made money on bad cases, lost money on good cases. So I mean, the result is just what happened. There's infinite amount of scenarios that could have happened. We just see what actually ended up happening. So that doesn't say, unless you can see the future, you can't say and knows exactly what Mother Nature has in store in the ground. You can never say that it was a good or bad decision. Yes, we make some mistakes now and then, and hopefully we learn from them. But just looking at what happened if you're up or down on a stock, especially again, let's say you buy a great case here, and right now you're down on it. Is that a mistake? Most people would say it's a mistake because it's down. But in a year it might be up 200% from here. So then the question is, was it a mistake? Because if you ask the people then, they would say, no, it wasn't a mistake because you're up. But right now people would say it's a mistake because it's down. I mean, it makes absolutely no sense. Nobody can say where any of these stocks are going to trade in the short term. And that's why what I mean by it's like the only way you can judge really if you have, above average stock picking, let's say, capabilities. If you have a portfolio here, you should compare it to what it's worth at around the same distressed levels in the sector. You shouldn't compare what you have here, then look at what your portfolio is worth here when everything is down and say, yeah, I'm a shitty investor. Or you buy here and up here and say, yeah, I'm the greatest investor ever. No, these are just circumstances. This is the herd. And you have to compare, like, equal sentiment levels should be compared to equal sentiment levels. That's how it goes. So again, if you're not down from here going here, that's a rarity. Then you're probably a very good stock picker, very good risk manager, let's say. But you don't need that per se. It's like, this is one of the HODL portfolios I manage, and this is I almost do no trading in this. I mean, I sometimes do some trades, like here. I think I went into Snowline Gold. I had that as the best risk reward I could come up with. No guarantees, of course, but I was confident that, hey, I mean, I think they will. This looks like it's really is a big deal, and I don't remember what the market cap was at. Around two. I mean, I think I've had Snowline since like 50 cents in this portfolio, but I really added around, let's say, $2. And fast forward a few months, Snowline revalued higher. The case turned out so far well. I didn't know that, of course, but it turned out well. And it might turn out much better over the next 2 years. But then I found, Magna Mining, for example, and I think that was even a better risk reward than, let's say, Snowline at $4. So now Magna Mining is the largest holding in this particular portfolio. And still is, because I don't think Magna Mining is anywhere close to fair value. But that doesn't mean that's a guarantee. Maybe, I don't know. I don't know many red flags with Magna Mining, but who knows? Something might happen. Might go down. Still, this portfolio has some returns stored up. I mean, GDXJ over the same time period, 3-year time period, is down 5.76%. So this might not look like much, a double over 3 years. Oh, that's exciting. Everybody's in the sector for 10 baggers. But consider that, like, it's up 3 years when the sector has gone like this. I'm very happy with the returns I've been able to provide to this family member. Handedly beating the market, and with not much trading. And, quite a diversified portfolio. Well, I mean, if you ask, actual, I don't know, wealth managers, they would say, hey, that's incredibly risky. I mean, listen to most. They say, like, have 30% of your portfolio in stocks, and if you have 20% of that in minors, maybe you have, of that 20%, you'll have 90% in majors and 10% in juniors. Now, this is a completely focused junior portfolio, 100% juniors. Is it risky? Sure, but like the risk reward is much better. I mean, Barrick Gold, for example, shit can happen. Gold can go down, but Barrick Gold isn't going to triple anytime soon. Some of these juniors might triple their value in next 2 years. Barrick Gold isn't going to triple its value. So yes, there's more, operational risk and stuff like that. But that's why you only need a few to really work out. Like I showed here. If just a few of these work out, maybe, if you had Barrick Gold, Agnico, and whatever, it's like they're not going to triple in value unless gold goes to, like, I don't know, $2,500, $3,000. Some of these juniors, if they prove their story and gold goes to 2,500 or 3,000, they might go up 20 times. It's going to pay for every other holding. So that's just, diversified risk to the upside. And at the same time, yes, there's a bunch of company-specific risk, but that's why you want that asymmetrical downside versus upside, because any stock here can only go down 100%, but it can go up obviously like 1,000%. So this is still. I haven't changed anything. I think in the HODL portfolio since pretty much a month. I haven't really done any change. It's just chugging along basically. And in the meantime, yes, you'll see some stocks like, oh, this is up 10% in a day, but it's like, it's easy to look at a ramping stock. It's like I have some Kootenai silver, for example. I think that went up like 28% on the GDXJ rebalancing. And it's easy to get FOMO, or people show that, hey, Kootenai is up 28%. But my position in Kootenai might be like, I don't know, 0.6% of my portfolio, or 0.5 or whatever. It's like, doesn't matter too much. Yes, that's nice, but it's like, never get the idea that if you see a stock that is going up a lot, it's like almost nobody has, like, nobody should at least have like 100% in that stock. But people want to show their highlights. And I do too. I'm human as well. But it's like, don't get that. You don't need to have that jealousy or FOMO when you see a stock go up. Maybe that's like 0.3% of that person's portfolio. So it doesn't matter. Again, it's like, if you have a 10% position in a stock that goes up 30%, that's 3%. And if you have sub 5 or 0.5% position, that needs to go up like like 6 times to have the same impact. So I personally rather have high conviction cases with much larger weightings. It's like, I wouldn't be surprised at all if any of these went up at least 50% in the next 12 months. And if they do that, almost the portfolio is going to at least go up 40%. That's superb results for 12 months. But just to touch on it, that's like Magna Mining. I've been over this a lot of times by now. Very large margin of safety, 10-bagger potential over the next, I think, 3 years. Snowline Gold, more of a high risk, high reward play. Could go up a lot still. It might be the largest discovery in North America in quite some time, but there's obviously risks, etc. And that's what I mean by, I don't need every of these stories to work out. HODL Gold, one of the absolute biggest no-brainers around, that when it was at $2 just a few months ago. Have sold some of that, but it's, in my opinion, still a large margin of safety, got a lot of upside, gonna try to go into production, whatever. Goliath Resources, still, I think the case is intact. They're gonna do a lot of drilling in 2023. I think this could turn out to be a multi-million ounce mine with solid margins. Could very well be worth several hundred millions at the end of the day, or over $1 billion in let's say 2 years. I think market cap's around 100 million or something. Do I need this to work out as I hope? No, again, I need a few of these to work out. Western Alaska, probably one of the best, at least, silver exploration plays I know of. Bonanza, great stuff. So you have that, kind of margin of safety in the sense that if this becomes a mine, given the grades, this could be worth a lot in almost any silver price environment. And it also has, lead and zinc as byproducts, and both those two are near 5-year lows in inventory at LME. So I like that. Tectonic Metals, been a good performer. I think that's up like 200% in just 6 months. Still have, I think, almost all of the shares in this portfolio still. More of a high risk, high reward, but I think when we get closer to drill season, etc., next year, I think this could revalue quite a bit. And of course, if they actually have something, a large RIRGS system, I think they have a market cap of 40 million. If this turns out to be the real deal, a large multi-million ounce gold system that could become a mine one day, 40 million is obviously has some room to grow. 10 bagger from here, excluding dilution, would put it at 400 million. So, I mean, if it would turn into a giant mine, who knows how many, 10, 20, 30 bagger potential. But again, absolutely no guarantee of that. Absolutely no guarantee of that. But that's why, if any of these turn out well, or along the lines I think they might turn out in the next 2 years, I need a couple of them or a handful of them to basically, make the whole portfolio have a good 2-year streak. Low resources, dirt cheap. I think just looking at the chart, I mean, big consolidation. I think they're gonna have a maiden resource out within, I think, 3 months. I think that might shock people. And if we go into a good environment when they're sitting with one of the largest silver polymetallic resources around, including a bunch of tin. Yes, it's in Bolivia, but I think that's already over discounted for being in Bolivia. I don't think Bolivia is that bad, actually. And I've heard that the president wants, I think, 3 to 5 mines to be built within the next couple or several years. That's obviously a good signal value. I think it's just dirt cheap, and I think when that consolidation breaks, which has been ongoing for like 1.5 years, I think Eloro could be a multi-bagger. Brixton Metals, more of a, probably one of the highest risk, high reward cases in the short term, because we have more assets awaited from, I think, all 3 targets: Metla, Camp Creek, and Trapper. Trapper just announced some good gold intercepts, more of a on the lower grade bulk tonnage side, like I think it was, what was it, like 262 meters, 1 gram per ton, including though 75 meters of 2, including 7 meters of 7 grams per ton. 102 over 1.2. Lower grade interval, some higher grade stuff. 28 meters, 1.33. This had okay, so it was a 102 meter interval of 1 gram, and also a 262 of 1 gram, and 89 and 90 meters of 0.8, including 1.75, and that starts at 4 meters depth, which is obviously very good. Interesting. I don't know what's gonna turn out, how Trapper is gonna turn out. It's quite, north and remote, etc. So I would think that Trapper needs to be quite meaty to warrant development on its own. But of course, if Trapper or Metal or any of the other company targets also work out, that's gonna lower the threshold for critical success at any of those, because if you put in, let's say, infrastructure to any of those projects, I mean, it's gonna be way cheaper to put in more infrastructure to build, let's say, a gold mine as well. And yeah, in the meantime, we're still waiting for Camp Creek drill results. So I expect it could get very swingy in the short term, depending on what especially Camp Creek as the results show, because that's why I think BHP took a position. One thing I would say is, like, we know, or watching one interview where Gary talks to Quinton and also their geologist, I don't remember what her name was, but they showed that XRF results and the actual assays in the core correlated very favorably. So one has to ask oneself, does one think that BHP has seen the XRF results for some of the holes that have been drilled at Camp Creek today? If they saw that before they announced an investment, that might indicate that yes, these holes look good based on preliminary XRF results. That's remains to be seen. But I do think also, maybe it's just slow assay labs or whatever, but maybe I think some juniors are strategically, let's say, waiting to publish good news to the new year when we are past tax loss selling season. And again, even though I know it's very volatile or might be very volatile in Brixton Metals, and I dislike taking full-on assay risk typically, Brixton can at least, I mean, given the results out of Trapper, that is an intact story in itself. Metla, when one recent interview with Gary, he talked favorably about Metla, that it will be doing a lot of work there. So that is, you can't kill that story either. And Camp Creek, I have simply a hard time seeing that the results will be so poor after BHP's recent investment that target could get killed. And potentially, given BHP's recent investment, maybe it suggests that the results will actually be good. So I have no idea really if Brixton will see a 40% haircut or 100% jump after all the assay results are out. But importantly, I don't think there's a high chance or a high risk that any of the results could really kill the story. Pretty much from a long-term perspective. So even if you take a bath, for example, I don't think. I think hold long enough. That's going to prove to be in green again. Montage Gold, remarkable shareholder register. Endeavour, Barrick, Perseus, Lundin. I think this is super cheap. It's in Côte d'Ivoire or Ivory Coast, Africa. Superb team, ex-Redback. I think that's super cheap right now. I think it's going to be worth much more in 1-2 years. Pacific Ridge, I think that has gotten too cheap again. I mean, they have like 2 legit discoveries. And since I have some copper exposure obviously in this portfolio via Brixton. I have tin with Eloro. I have silver obviously with Western Alaska, nickel with Magna, and PGMs. Add some added copper exposure in Pacific Ridge. Yes, it's a high risk, high reward drill story, but it's just so cheap and they have more than one discovery. So I mean, if there's a shot that any of these turns out to be legit copper mines, I think there's serious multi-bagger potential. Even though it takes some time and they haven't, they only drilled like, 6,000 meters or so last season. So that's one hurdle. I mean, it's kind of a slow pace because it's seasonality and, deep drill holes are kind of expensive, etc. Still, I think it's too cheap right now. Just looking at some other like potential tax loss selling candidates. I've talked about District Metals before. It's up from a low like 0.5 cents, I think. To me, it looks like Sweden is getting better. I think this is still cheap. I mean, they have 3 projects. They announced historic intercepts from the Svärdsjö property, which was drilled by Boliden, and it's like I wrote here, 22,000 meters of drilling, probably cost around 6 million, I think, to replicate today. That's what they kind of found, from historic results, which had been confidential until recently. Super cheap, 3 projects, good looking projects. Just cheap. And also I like the fact that it's in Sweden, so it's my patriotic duty to I want to see them succeed, basically. A great team as well. So I added quite a bit during this low here. And of course, I was in way earlier than that. I thought it was cheap here already. Didn't stop it from going down 70% more, but it just got absurd. So now I have a bigger position in District than I've ever had. Haven't sold any on the uptick here yet, because again, I think this is too cheap. Yes, they're gonna do a financing, hopefully one of these days. Maybe that gets them up to 10 million market cap with like 2-3 million in cash. Is that expensive? Nope, I don't think so. Mantaro Precious Metals, which has been I got into, I think, the IPO, and I don't remember. I think they raised some more money. I got in there, and obviously I took a huge bath in Mantaro since it's down to, I think it hit a low of 3 cents. 3 cents. It's at 4.5 cents now. 2.8 million market cap. It's been a very frustrating story. It's like they got really nice looking projects, but it appears that maybe the CEO wasn't the best. It appears that he's had quite a high salary for especially a market cap of this size right now. But they recently announced that a new CEO has been appointed. It's like just their Golden Hill project, 4 meters of 6.46, 4.69 meters. This is pretty much a fully permitted mining concession in Bolivia. And they have some Peru assets that have silver that looks really good. I just don't see how this is not cheap. I mean, and it's one of those stories. I mean, if this ends up working out, I mean, a 10-bagger would maybe put it at like 30 million. Is that an exaggeration, or does that sound like a lot? No, I don't think so. But it's like, it's not a major position. I mean, it started out as quite a robust one. It's gone down a lot, so it's not a major position anymore. I've added some recently, but let's say my position is down to maybe 3% or whatever. So I mean, if it doesn't work out, okay, yeah, not the end of the world. If it does work out, it's like a 10-bagger completely out of the question, or more than that. No, I don't think so. So even though it's a small position right now, yeah, I mean, it's the risk or the upside versus downside is asymmetrical. It can only go down 100% from here. It can go up, whatever, I don't know, a lot if things turn out well. But again, it's like I won't cry myself to sleep if this ends up at 0. But if it ends up at, I don't know, 30 cents, it will for sure have some impact on the portfolio. And maybe at 30 cents it will be an even better case. And in that case, okay, if it goes up to 30 cents, let's say, because good stuff is happening and the sector is turned around, maybe you'll be happy with having a much larger position at 30 cents, because if it reached 30 cents, maybe there's a high likelihood it will reach $1. I'm just, speculating here, but that's also a point on, you shouldn't really just look at, okay, how much am I up in case it goes up? You should say, how good is the case right now? I mean, some cases are much better, 100% higher, because they have been de-risked, or the value has increased as much. It should be up 200%, whatever. So I hate this, like, always take profits on a double, sell half or whatever. I mean, seriously, I don't buy into that at all. If something has gone up 100%, maybe it should have gone up 200%. So let's say, yes, your position has doubled. So some people say you should take half of it away, but that's just coping mechanism, in my opinion, for like, it doesn't feel as bad if it goes south because you've taken your principal out, for example. But if the case is a lot better after it's gone up 100% on a discovery or a new discovery or whatever, why would you take half of the money off the table? Maybe you should actually not only keep the now double this. The doubling of the position means, obviously, if it goes up 100%, you have the double the exposure. Maybe you should add a 50% on top of that. I don't know. It's case by case, obviously, but still, it's like I hate strict rules like that. It makes no sense to me at all. TriStar Gold, also a sponsor company that's have been kind of, I guess, boring, let's say. But they actually have a legit project. I think it has a net present value around, I don't know, 500 million US at $1,800 gold. I wouldn't be too surprised if somebody actually bought this one day. And at 33 million, and super boring, almost no volume, etc. I think we've seen some insider buying, 2 months ago as well. Yeah, I don't think one is overpaying for TriStar Gold. I think it's one of these cases. I mean, I would say for sure it's not worthless. It's quite de-risked. I think they have a PFS study on it already. Royal Gold bought into the company. That's good vote of confidence. It was some time ago now, of course, but they still have some money as well, I think. Yeah, you can see it, goes to these lows, then go higher, then to a low, and then go higher. Might not be the most exciting one, but I have a hard time seeing one is overpaying for TriStar Gold at 33 million Canadian, excluding cash, given that they have a project that's probably worth 400 or 500 million on paper at $1,800 gold. So again, asymmetrical upside downside. You can only lose 100%. If this actually gets bought out or they are able to finance it or whatever. I mean, I think there's some obvious upside potential. Cassiar Gold Corp, I think this has really gotten hurt with tax loss selling. I think this one has become quite cheap again. I mean, it's not too long ago it was up at $1.45, and not much has changed, I would say, since then. Cheap stock, I would be surprised if this was at a lower valuation within 2 years. If they make some real good discoveries or step outs, etc., things could change a lot. Obviously, there's no mine that's being priced in now at 45 million, especially since they have both Cassiar South and Cassiar North. So it's like 22.5 million per target, let's say, and one has a bulk resource of, I think, 1.4 million ounces already, and that's gonna grow if they just update the resource and keep on drilling. But a tax loss selling candidate in my book. And again, you don't need any of these to for sure work out. It's just that if some work out, they're gonna pay for a bunch of other ones. Yeah, Montage Gold, which I've talked about. I think the case changed a lot just around almost exactly 1 month ago. Pretty much exactly 1 month ago. I think the market is still asleep on this one. Good long term. I mean, these guys are the best value creators in the business in Africa when it comes to gold, basically. It's the ex-Redback mining team. And again, the case changed completely, I think, here. And that is yet to be identified by Mr. Market. And I look forward to seeing the news releases out of Montage next 12 months. Yeah, Pacific Ridge, I touched on that. I mean, an uptrend for sure. And of course, people complain that it's at 245 right now. But it's pretty solid uptrend anyway, especially in a market that's down 80%. I think this one has become too cheap again. The financing obviously put a damper on the stock price. But I like Pacific Ridge at this valuation with just raised 6 million. It has not been reflected yet, so maybe the market cap is 25, 26, 27. Still cheap in my book with the amount of projects they have and that they have 2 legit discoveries already. Brixton, I've talked about that one, expected to be swingy. NuLegacy Gold is actually one I've, now and then come back and look at. Now it's basically priced that this is gonna go bankrupt or the case is completely over. I'm not 100% sure I would agree with that, but it's still one of those. I mean, I'm tempted to, if I can take take some shares at 1 cent. If this awakes, if this kicks is kicked alive, let's say, and they, maybe raise some money, do another drill, yada 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 drill program. I don't think. I mean, last time they did deep drilling, this was back here, I think. I think it went up to like 90 million market cap, I think, before assays were out. Just on, expectations. Hey, if they hit, given that we have like Gold Strike, no, not Gold Strike, Cortez, the Cortez mine, I think it is, just a few kilometers to the northwest, there's a possibility that system extends. So it's a very, very exciting, if you know what I mean, high risk, high reward play. So if that gets kicked alive again, just from drill hype alone in a better market environment, I could see, few 100% perhaps in drill hype speculation. But obviously not one where you would take like a massive position in my opinion. That's about it. It's like some companies have gone up like 100-200% from the bottoms without much happening. Some are, at new lows or barely off the ground or around the, lows, let's say. So I think there's massive opportunity in this sector. And again, it's like if you for sure, given the valuations, you for sure don't need 100% hit rate from these valuations. It's just a smorgasbord of opportunity out there. And I mean, I don't even own all of these. These are just, how can you go wrong with some of these? It's like there's companies that know more than us that have said that, you have a legit project. And if you're buying a legit project for like 60% discount or whatever, that's never by definition a mistake. So it's like, you certainly don't need to own the companies I own. And I expect that if I weren't allowed to own any companies that I currently own, I could still make a portfolio that would handily beat the GDXJ over the next 2 years. There's simply that much opportunity around right now. And again, just from the swing in sentiment alone, when we go from here to here, regardless almost of how crappy the story is, it's going to be up. And obviously the opposite could happen, that it's when if you buy in here, almost everything will be down, no matter how good it is. That's just how this sector works. Thanks for listening. Have a great day. Oh, and consider me biased and all that, not investing advice. Assume my own shares of all companies mentioned, and assume every single one is a banner sponsor. Just assume all that and make up form your own opinion, do your own due diligence. I don't share your profits or your losses. It's up to ourselves to, be responsible for our own investment decisions. And again, it's like I can't guarantee that any of these work out, and that's built in basically. It's that the ones that do work out, give them a long enough time, a few of them will pay for a bunch of others. So that's also why I don't do this thing, which seems to be quite popular, like pointing out other people's mistakes, or haha, you bought this and that's down, you're an idiot, or whatever. It's like you have no idea how people's actual portfolios are. I have a bunch of even in like the HODL portfolio, a bunch of stories that are down 80%, and some I still have, some I have sold. But typically they might have started off as 1% positions or something like that. And the ones that have worked out, typically they have been like starting off as 5 to 10% positions. So they paid for a bunch of stocks that went south. I mean, that's just the nature of this game. In this high risk, high reward sector, big success is a rarity, but if you hold a big success long enough, it can pay for tons of stores that did not end up well. Assuming you don't, again, immediately sell out a good, I mean, like in Great Bear, for example, if you were in pre-discovery, it went up 100% on the discovery, and you're like, yeah, okay, I got my 100%, so I'm selling out. You missed like a 10 to 20 bagger, because discovery is when it starts. It's like alpha exploration right now, which has some pretty encouraging drill results in Eritrea. That story just got a lot better and has, started basically. In 2-3 years, maybe it will be obvious by then that they found a major gold system. So I mean, the discovery hole and the 100% jump, for example, is the start of something that could become a lot more than 100%. Thanks for listening. Bye.